Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ben Slavin, Global Head of ETFs Asset Servicing at BNY Mellon, to discuss where the momentum for ETFs will be in 2021, as well as what needs to be achieved to get a Bitcoin ETF to market. Certainly a hot topic, Ben. It's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
Let's kick it off with ESG. How will ESG and infrastructure ETFs gain further momentum under a Biden administration?
Well, first, ESG has been really the hot topic in the industry the past year or so. And ESG ETFs as a whole have reached record highs in assets. So we've seen that category of ETFs almost double. And we're approaching around 200 billion of ESG themed ETFs. And we expect that to grow. Certainly in Europe has led the way in ESG investing, specifically in the ETF space. But we're starting to see more than just green shoots here in the US and some uptake by investors. We've seen institutional players look at the broad-based benchmarks, and more retail investors look to play ESG themes through different types of thematic ETFs. Now on infrastructure ETFs, in the post-election environment, we're seeing a lot of interest in playing different ways to try to capture these themes that the new administration is focusing on, specifically around green energy and other infrastructure ETFs. So in this case, ETFs, once again, are an easy, convenient, liquid, low-cost tool to play some of these themes. And the beauty of it is in the ETF market, we're seeing a tremendous amount of innovation still, and you're seeing other ways to slice and dice these categories for, to make it, again, convenient for investors to access some of these trades.
Ben, of course, here's the million-dollar question. How could developments in 2021 prime ETF markets for a Bitcoin ETF in 2022, perhaps, and what are the steps needed to achieve this?
Well, Jill, I think it might be the billion-dollar question rather than the million-dollar question. Bitcoin ETFs certainly are, something that the market wants, and it's been clear from some of the other products out there of the demand for these types of products. Just this week, we've seen ETFs tracking Bitcoin launch in Canada with an incredible amount of success. In fact, the first Bitcoin ETF tracker listed in Canada smashed the all-time record for first day trading volume. And so that just gives you, the investors and the public some indication of the demand. We've also seen the Grayscale GBTC product also take in significant flow this year. And those assets, I think, are now above 30 billion in total AUM. But the regulatory environment in the US still remains cloudy. There's a lot of optimism from an ETF standpoint that an ETF will be approved by the SEC. There really, is no specific indication, and it is hard to speculate. But that said, we are starting to see the queue reforming with a hope that the SEC will move, and many of the issuers wanting to be the first or effectively at the early days to provide those types of products, and no doubt it will attract an incredible amount of attention. But I think it's 2022 until we see those products listed in the US.
Okay, now million-dollar or perhaps billion-dollar question part two. How can investors use ETFs as a trading proxy when online platforms, it's been in the news this week with online platforms on the Hill testifying, but when restricting access, and how can they use ETFs to hedge that market risk?
Well, it's another great question. We saw ETFs being used as a trading proxy or a liquidity vehicle, with some of these stocks that investors lost access to due to the trading restrictions, again, at some of the online platforms. So this is something, though, that was used here recently, but is really old news in the ETF market. So, ETFs, really trade in the market in many cases where the underlying actually isn't trading. So if you think about trading an ETF, for example, that holds Japanese stocks, but it's in US trading hours, the underlying markets are closed. So in this case, ETFs are really functioning as, a way to access liquidity, and in many ways a price discovery vehicle for investors, because effectively if you're trading today, you're really anticipating where the Tokyo Stock Exchange is going to open for this basket of securities tomorrow in my example. And you were seeing that with some of these stocks, such as, again, GameStop, and some of the other names that we were seeing significant volatility in, and hence, some of the curbs on trading, and the ETFs that held those names, really started to, pick up volume as investors were using them as a tool, to whether it be to take a long position, hedge, or generally, look at it as a price discovery vehicle, at least in part, to try to manage their portfolio.
And what are the key factors that will affect ETF market flows in 2021, including fees, the shift towards value might be coming back, and the move away from smart beta?
Is value going to come back has been the question on many minds for quite some time. So there's certainly some growing evidence there that trade may be coming back into favor. Certainly we've been in a growth momentum driven market. And I think though investors are trying to, with again, some of the flows we're seeing, making some of those bets that there will be some mean reversion here and value will come back into favor. Smart beta as a category, and I use smart beta in a broad sense for products really that are non-market cap weighted, as a catch-all. But that was the hot topic for the last couple of years. Certainly, we've seen the flows start to abate there. But what I do think is ultimately, it's really the war between beta and what I'll call non-beta. So on the beta side, fees are really driving that market. And there's been an incredible amount of fee pressure by the industry. But this has been great for investors. It's just driving the overall costs down for shareholders. On the other part, that 30% that is non-beta, that part of the market is intensifying. Again, fee compression, lots of innovation, lots of issuers coming to the market. It has been challenging on the industry, but again, great for shareholders. So I would expect that fight to continue to intensify, both in terms of fees and also in terms of product development, to fight for sort of those non-market cap weighted or beta ETF assets.
And Ben, finally, how could regulatory changes and new SEC leadership precipitate a move towards changes within the ETF space, or perhaps lend to more growth in the industry?
Well, the regulatory environment with regard to ETFs continues to turn favorable. We did have the ETF rule recently, which is 6C11, which really opened the door to several things in the industry that are helping to accelerate product development, lower barriers to entry by new participants, and open up some different classes of product that I think, again, are beneficial to the market and investors. So, these types of things are custom baskets, for example, which was something that only certain issuers have. Now the playing field has been leveled, and many issuers, can take advantage of it. And that's something that, again, is good for the market and investors. I think it will certainly have a benefit for fixed income ETFs, effectively helping them with tax efficiency, but also just making it easier to manage. So there are several things embedded in that rule, I think, that will, again, certainly speed, again, the product development, and the environment, setting aside Bitcoin, seems to be continuing to trend favorable. And I don't expect any changes with respect to, the SEC under a Biden administration at this point. It's very difficult to speculate how the SEC might change or take different views, but at least we can look back in recent history, and again, we see again a catalyst towards providing a tailwind really for the industry to help it continue to accelerate its growth.
All right, Ben, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.